Hello, I'm Annabel Brodie-Smith, Communications Director of the Association of Investment Companies. And earlier today, I was talking to Will Fulton. He's the manager of UK Commercial Property REIT. And he was talking about the outlook for commercial property.
Thank you, Annabelle. Good to be here today. I'd say the advantages of investing in investment companies in real estate are threefold. First, I'm able to invest all the money a shareholder would give me. I don't require to keep a cash buffer to meet the potential for redemptions. So your money is being invested 100% in following a real estate strategy. The second is I can get on with that strategy without the potential need to sell property to meet redemptions should investors want out. So I'm free to carry on with the refurbishment of a building, with improving earnings and so forth within that and not be distracted, if you like. And on that, the third would be liquidity. So the reason that I'm free to follow my strategy is that listed in the case of UK Commercial Property, listed in the FTSE 250 index, there's tremendous liquidity, 1.8 million shares in our latest calculation traded daily. So the ability for investors to come in and out without the need for me to keep a cash buffer. Our investment strategy, I'd like to deal with that in two ways. And the first is to understand a little bit of history. So the strategy is about being forward-looking, looking to try and anticipate structural changes in the market. We invest in a prime portfolio, and from early 2015, looking ahead, we saw some headwinds in the retail sector. So I sold down a lot of our retail investments, selling shopping centres, bringing retail exposure down from, say, 45% down to around 20%, where it would be today. And with that money, I reinvested a lot into the industrial and logistics market. So at the moment, I have around 50% of shareholders' money in industrial and logistics, and over half of that in urban locations, which are generating tremendous rental growth. Looking forward, I'm happy with that exposure, particularly around the urban areas, shortage of land, demographic changes, which is great. But for new deployment and thinking about demographic changes, which I mentioned, changes in technology, urbanization of the population, another element of change coming forward, and the build-up of the alternative market. In real estate, by alternatives, I mean everything that isn't an office, a shop, or a warehouse industrial property. And that could include assets like hotels, student housing, or self-storage, really that whole plethora of everything that is not a shop, an office, and a shed. And intellectually, there's a huge argument for parts of those market. Not all of the same, very, very important to get the right areas of those. But some of those, and I'm not going to give away our trade secrets of exactly where we're looking, are showing good prospects for growth. Along with that, very aware of opportunities that might arise. Some political stability could cause opportunities to buy well in the market going forward as well. Yeah, political uncertainty is an interesting question. I think on two levels. It's harder for people to make accurate forecasts, to translate politics into economics and then into rental growth forecasts. So that's tougher to do. And because of that, I've positioned our portfolio towards both the area of the market, the industrial logistics market, where we have 50% of our assets that I see rental growth coming from. But I also think it's a protective measure, a defensive measure against whatever a bad Brexit would be if that was the case, in that people are still going to be shopping online and in some shops, and that online, that need for logistics, moving goods around, is still there. So it's both defensive and growth in the one area. It's split. Positively, again, in the industrial and logistics sector, we're positive, particularly the urban areas of the country and particularly around London, where we have a lot of our exposure. And again, 25% of the whole portfolio in urban logistics. Very positive from that perspective. Headwinds in some of the retail areas, I think, where rents are under pressure, which is why we've been, over the last 3 years, selling retail, moving into industrial. And then going forward, looking at sustainable income streams, which could be logistics. It could also be parts of the alternative sector.
Will believes, aside from being one of the largest property investment companies with a diversified portfolio of over £1.5 billion, he is positioned towards urban logistics. That's warehouses for e-commerce. And he believes this is a growing area with growing rents, which could increase income for investors.